evening, everybody. We thought that, in fact, Bhairav, Anish and I discussed last time when they did an event with ULI, and we were discussing that, we should also touch on the peripherals of real estate, because I think what we've seen is that while real estate, is a great asset class, somewhere in the past few years, some of the asset classes that sort of hinge between real estate and infrastructure have gained increased traction. And the added infrastructure classification has allowed them to sort of exit in a tax optimized manner, not just through REITs, which can only be public, but also through InvITs, which can be both public listed and private listed. So I think we'll, in the second session, we'll keep it very short and commercial. In just about 15-20 minutes, my colleague Shreyas and Anish will quickly discuss on monetization of some of these assets through InvITs and how is it working. But I think purely for this part, the first session, we thought of keeping it highly commercial, trying to understand what are these peripheral asset classes, logistics, student housing, edu infra, healthcare, life sciences, and the one question I keep on having, and I'm going to ask both of them, is in a market where Government of India is offering you 7 to 8%, how are you giving comfort to investors that invest in me at 10 to 11%? So I think some difficult questions, but largely more commercial from an IRR perspective, and I'll try not to be a lawyer and just wear the commercial hat. But maybe start and in this session, I thought Shobit will not be moderator, will not be a speaker or a panelist, as he
probably thought I don't have the answers. I have the questions to ask.
He has the questions. And for the past, it's been like 14, 15 years, I think he's always co-moderated all our sessions. So I think we are going to co-moderate. So two moderators and two panelists हैं. हमारा एक panelist तो
दोनों panelists को बार-बार peripheral बोल के periphery पे बिठाया हुआ है.
So maybe we'll start. I think maybe Ritesh and Shal and Shobit, you guys could introduce yourself.
Okay. So my name is Ritesh Vora. I run real estate for InvestCorp in India. We do some residential credit, but more importantly, we are focusing on logistics, warehousing, education infrastructure as some of the new asset classes where we are building out verticals. We put out about $300 million, looking to put out another couple of $100 million hopefully this year on these asset classes.
And maybe you could also just explain about role of InvestCorp generally as an asset manager.
So InvestCorp is a global house. We've got about $50 billion AUM. We do real estate, private equity, hedge funds, credit, etc., etc. Origins are from the Gulf, but now fairly global in terms of scale and reach. Warehousing is one of our most sort of high conviction themes in terms of real estate investments. We're doing this in the US, in Europe, in the Gulf, and in India. Education related infrastructure as well. So we're doing student housing in the US, we're doing student housing in the UK, and we're doing some take on education infrastructure in India, which will hopefully also include student housing.
Thank you. I'm Vishal Goel. I'm co-founder of Celestra Ventures. We started in 2015. Basically, we wanted to do what today we call as alternatives. Idea was that we cannot compete and raise capital to do the mainstream assets, and I come from a REIT background, so and just meet my other co-founder also used to work for India REIT, although that was a residential platform, not a REIT in the real parlance. And we started off with the school infrastructure bit. Currently we have about $250 million of school assets, K-12 assets, and we have about 3,000 beds, student housing beds, which we own. And over the years, we discovered that pure play infrastructure ownership won't work, and we have developed capabilities of running the schools. So currently, we run about schools which have about 15,000 kids coming to our schools every day. And we also have a dominant presence along with Actis on the life sciences side. We develop lab space and rented factories, what are used by the life science industry, which got a tremendous boost thanks to COVID. and continues to grow globally. And India has to play a very important role in this asset class. And there are other asset class which interests us, which is beyond warehousing, like what we call as beds and sheds strategy, worker housing beds and factory sheds. And we also do a little bit of a work on medical centers, which again is not a hospital but is a specialized healthcare delivery center. So I think that's about us.
Hi, I'm Shobhit Agarwal. I head up Anarog Capital, basically part of the Anarog Group. We are a homegrown services firm on real estate, and I'm sort of responsible within that to keep following capital and where it's going and what it needs. So we end up doing a lot of fundraise for our clients on the real estate side. Now, of course, I'm assuming I'm on the panel because there's nothing left on the mainstream, so we have to talk about alternatives. So yeah, industrial is big. It has large appetite. I think the world is pivoting towards alternatives, and so this is probably the right time to talk about it. My contribution on industrial, although I hate to go to sites, but we've raised a lot of money for that sector, and somehow it's quite attractive at the moment, and it's growing. So over to you.
Thank you. So maybe Ritesh, I'll probably start with you, and I think I'll just you guys were significant players, sort of offshore GPs, and this was a significant acquisition when we were the lawyers at that point in time acting for InvestCorp when we took IDFC over, and I think you were pretty much the largest driver and the real estate strategy, and now it's pivoted to alternatives. And I think it started probably after 2014, but essentially after 2019 we saw significant foreign investor interest. In fact, I think for those of you who've seen the era of pre-2014, India ko bolte the, I will never do it again. And from that time, there were situations where people were carving out. And now I think largely because of infrastructure, the interest and all that, there has been significant interest in the InvIT asset classes, and also which is now going towards more of annuity. So I think the question to you, Ritesh, is that what has been your driver for moving to edu-infra? Is it annuity? Is it the excitement to go more to annuity and safer asset classes? Or is it a global sort of shift that you're trying to catch on to?
Sure. No, thanks, Richard. So, see, I think from our perspective, this was a mix of a push and a pull in terms of our strategy. As IDFC, we were doing residential credit. We thought we need to do some other asset classes. We need to see what else is out there. For us, at least, both warehousing as well as education infrastructure have some basic underlying, growth drivers, which seem to be quite secular in nature, which seem to be quite long term. Whether it's demographics, whether it's on the warehousing side, the whole e-commerce, corporatization of India, GST, infrastructure status, etc., all of those things. We felt that these are sectors which have good resilience from a long-term perspective and could be interesting asset classes for us to play in. So that was the pull. On the push side was our size. So we are a mid-market player. 50 billion is not a lot when you look at global asset managers, and within that, of course, real estate is about a quarter of that. So we don't have the ability to put down $500 million to buy an office building. We thought we have to look at niche strategies where we can play a meaningful role, where our capital will actually sort of make sense, the size of the checkbook that we have, and more importantly, where we can actually create a franchise which is market leading, and then ride on it to create scale. So if it's education infrastructure, for us, of course, Celestra has been doing it for a while. We thought this was a niche where we could get in, we could build scale. Once we've got to a certain size and scale, we could then get large institutional capital to come in and essentially become, a large dominant player in the space. Same for warehousing, although, I don't think we can call it peripheral anymore or, alternative anymore, right? Because it's as mainstream as offices and residential. In fact, if anything, I was thinking on the way coming here, then maybe retail is what is peripheral now, or hotels is what is peripheral. Actually, offices, residential and warehousing are three asset classes which are the most mainstream as far as real estate is concerned. In India, of course, it's peculiar because we are infrastructure, but there as well, we just thought, India is at a point where offices were maybe like 10 years ago. Institutionalization is happening, foreign capital is coming in, the whole tenant profile, the kind of buildings being put out, the kind of compliances, all of that was evolving rapidly. And we thought it was a good time for us to sort of get in and build some scale, some presence, etc.
But Ritesh, can we just talk about sort of the edu-infra strategy, right? Because at one end, I think malls and other completed asset classes are getting saturated. And here you have a situation of plenty. And can you just throw some light on number one, on how do you see the market depth, okay? What are the IRRs that you make? What is the cap rate that you're expecting, the yields, your exit strategy? Like, how do the numbers stack up for you? And what is the absorption, what is the depth of the market?
So there isn't too much depth, that's a fact. Difficult to find deals. Once you find them, and I think Vishal is a veteran in that space. So first, it's difficult to find deals. Second, once you find the deals, it's difficult to close on them because there are complications on all sides. There is a trust, there is a not-for-profit angle, there is all structuring that needs to be done, etc., etc. So it's not like you can say today that I want to put out $1 billion in this space and I want to put it out over the next 12 months. I think that money will probably keep sitting in your bank account itself. Difficult to find scaled up assets or portfolios which you can acquire.
And what are the challenges? Maybe we can just go a little bit granular. What are the challenges that you face on the ground when you deal, with school promoters?
So see, we took a view that we would only buy stabilized assets. We would only buy schools which have an operating history, which have an operator who's committed to the business. That automatically meant that most of these school assets that we're looking at acquiring were built maybe 5 years ago, 10 years ago, 15 years ago. The structuring was done as per that time. There was no propco, in a lot of cases, things are sitting inside the trust, or maybe the asset is owned by, the operator in a separate entity and the school is being run by the trust. So, then to carve out some of these assets to create, investment structure which is compliant in the legal sense, which is, kosher from a commercial sense, it becomes difficult. I think the other thing that we face is that the counterparties are not used to deal making. Counterparties are educationists. Counterparties are people who don't understand that doing a deal means a certain focus, a certain amount of resources to be put in, and a certain time frame within which we need to close. That takes essentially what that means is your deal closing times are much longer than what you would normally see. Easier to probably close a $1 billion office acquisition than to do a $30 million school acquisition, in terms of timelines and the issues that come up.
Does it bother them that, while they're getting cash, and we should talk about the numbers, on a compression basis, but does it bother them that now they're getting real cash, but the asset is going off their balance sheet and the P&L is becoming heavy? Or is it something that they don't care?
No, I think there's a mixed bag. There are people who don't want it to become a P&L issue where rental is being paid out, GST is being paid out, etc., etc. But there are people who have use for that cash. So I think it makes sense for them. On your point around the commercials and the numbers and so on, we are looking at typically doing these deals at like 9.5, 10 cap rates in terms of going in. Typically, with a 3%, 4% kind of an annual escalation. And obviously, when we look at exiting after holding this for a few years. We think there'll be some compression that we'll be able to get if it's a institution-owned, diversified, well-run portfolio, and that will lead to hopefully a good mid-teens kind of an IRR.
But the dampener probably is the GST.
Yeah, GST is a big factor.
Because while you charge GST on the lease rentals, being a school, you can't pass it on to the students because that is exempt.
Correct.
So I think GST becomes a big challenge. Sometimes I think there's also a practical challenge that the schools may not have much use of that capital. And do you also would you believe in redoing the building or something, or you just take or what's the strategy?
So on GST, my colleague Ajay, who's sitting here, who runs our Edu Infra business,
okay.
his thesis is that GST on school fees is coming. Just like it has come on hospital beds, above a certain threshold. If your school charges more than 10,000 rupees a month, you'll probably end up paying GST on that. Maybe that happens. We are anyway.
Very few people would have wished for the GST to come.
But he's not paying any school fees. So that's on the GST point.
Yeah.
In terms of end use of this money, we see all cases, right? We've seen people who want to sell lock, stock and barrel what they've built over 20, 30 years and just move away, and then we've seen people who want to reinvest and basically set up another asset, another operating portfolio or whatever. So I think it depends.
Okay.
Just before we let go of Ritesh, just two questions on school infra.
Like you'll ask all the questions to me first?
Yeah. First I'll ask you and then I'll come to Vishal first again. But that's my job here today. So
okay.
So how do you guys think about while you're underwriting school rents, how do you think about leverage, and what are the standard terms of lease? Do they pay you 12 months rent? Do they pay you 9 months rent? What's the lock-in period? What is the typical lease tenures? Because commercial is 9 and 3 plus 3 plus 3.
Correct.
So what happens
these are much longer.
Much longer.
So we're looking at 25, 30 years. There are some norms required, CBSE, ICSE, that you need to have minimum lease terms if you're operating a school out of a leased asset. We are typically looking at at least a 25, 30 year kind of lease, a 10, 15 year kind of a lock-in. Rentals are typically paid quarterly in advance. We prefer having escrow arrangements where fees comes into an escrow. From there, it gets paid out to us. Banks are willing to lend, especially if they see an institution sponsor. So they're not lending to the trust. Of course, in this space, like in hospitals, banks know that very difficult to foreclose on any asset if tomorrow the loan was to go bad. And that's one reason why you don't find too many lenders, but I think there is enough people who want to do it, especially if it's an institutional sponsor on the other side to whom they're lending. Similar to commercial assets, Shobhit, in terms of LTVs, 55, 60, 65%, and similar rates of interest.
And does it classify as real estate because you are in the PropCo rent business? So how does the government view this?
So I think if your lock-in is longer than the loan tenure, they're able to classify it as infra somewhere in their books.
Oh wow, that's nice.
But that doesn't mean anything in terms of interest rates. Maybe like 20 bips here or there, nothing else.
But it's more classified as infra, not real estate. Super.
Yeah. No, I think also the interesting part, I think the negatives aside, but I think the longer lease tenure, sort of it's more stabilized in the sense that footfalls might fall in malls or wherever during Black Swan events, but I think kids keep going to school. You keep making money.
Yeah.
So I think that's a big positive.
So Richard, I think from our perspective, when we did our whole analysis, we thought the only real risk in this business is the operator risk. If your operator was to go south on you, very difficult to retrieve, very difficult to recover value, etc., etc. So from our perspective, I think what we're thinking is only look at operators who are either institution owned, institution backed, or who have a real sort of skin in the game as far as this business is concerned, have been doing it for 10, 15, 20, 30 years already, are fully entrenched in the business. And for them, to mess around with one particular asset of theirs will create greater damage to their brand name and brand equity. So that's how we are sort of safeguarding ourselves.
Yeah, and the counterparty risk is actually, I think, and the other, sorry, before we just want to finish this asset class, I think the other challenge is also that while there's a practical challenge, you may get mortgage or whatever, I think, truth be told, what do you do with that asset? It's not like you can stop running a school and just sell that land and tomorrow there can be office complex.
No court will ever allow that.
So that's not going to practically happen. So I think that's the risk, but I think the good part is that, schools are probably better, counterparties to have than many others in several cases, although they are political influence in certain cases. And they can be waterfalls that can be structured. And I think that's where probably people have made money. You have made money. So I think, let me just ask this question to you, right? I think let me start with this. From beds and sheds to, student housing, to now life sciences, medical, care and life sciences, and rented factories. And I've known Vishal for many years now. Get into newer asset classes, which naturally calls for much higher cost of capital. So I want to ask you this: are you fearless or are you courageous? Let me tell you the difference also. Courageous means you know the fear and then you still walk. Fearless means you don't see the fear only and you walk. So tell me, which part are you to get into a new asset class?
Neither courageous nor neither fearless. Unlike many people in this room and him, when we started, we did not have capital, and I think all our strategies are based on things which are very differentiated and which can attract capital. I think the reason we got into schools was very simple, that nobody was doing it, and with 300 million students coming to school and a large part of it coming to a private school, even your driver does not want his child to go to a government school. So there was a need for infrastructure, and then we understood that a lot of NBFCs have a huge book towards school. So clearly they were borrowing, and they were borrowing at very high interest rate. And then came the PropCo, OpCo, ManCo structure, which we created. And now, of course, today the whole industry is going through a tectonic shift. And I still laugh at myself, because when we will go to investor pitches and we should say, kuch bhi ho jaye, that children will come to school. And then COVID came, right? And then 2 years, 3 years, there was nobody in the school. So, whatever you pitch can go wrong and whatever you think can go wrong. But one thing is the fact that people thought about EdTech, virtual schools and all that. I think now that we also operate schools, the type of admissions we are getting over the last 2 years, it is unimaginable, as an operator. And that's why you see all the top 20 global operators who are all funded by the CPPIBs, and the big boys of the world are now buying schools at crazy valuation. 15 times EBITDA is what they are paying for, and they're all buying schools. So what you will see is like what happened in the hospital sector. There will be a consolidation in the school sector also. A lot of families will exit, there will be a lot of corporatization, and I think we were, I would say, we saw that coming, because it was just not possible for the educationists, the way they were running the school, to keep scaling it up, and the demand would always take over. So we are working with the theory that this will go away. On the GST side, I'm a little less optimistic on the fee side, but I'm more optimistic on government giving us a 5% structure, which is no set-off and a 5% flat structure.
But why do you think they should give it to you? You are pure lease operators, right?
We are, first of all, SEBI has given us InvIT license, so we are no longer real estate. So we have official status of being infrastructure now.
You're in the better bucket.
Yeah, so
but that
so as infrastructure and with a social impact, and I think given that the need of India is to create manpower, I think there is obviously a much better need to look at this, and we don't have offset. The simple rule is any industry which does not get an offset should be in 5% bracket. Okay. That is our simple logic. We are not going by that you help us, support us because we are giving education. But simple logic is no offset, 5%. That is the standard rule. Like if you go to a restaurant, that is the same logic which comes in.
Yes.
So that's where we are, and we have now, of course, diversified because we saw some counterparty risk coming in, and today we have 50% of our assets which we operate ourselves. So I think that's something which has.
I want to ask you on that, because I think that you run the Crimson brand of schools, right? It's not easy for real estate players to get into school operations, and I think that's a big advantage, because if suppose a default happens, you know, you're not running to find an operator, you are the operator. But on the flip side, it's not easy to operate. So I want to understand your
So
operating.
after doing doing the school industry for 3-4 years, what we realized is that we are dependent of our 600, 500 crores on one beating heart. If that heart stops, your 500 crores is down the drain. All these education institutions are dependent on single guy. So there is a school called Lucknow, if you're somebody from Lucknow, City Montessori School. It has about 40,000 students in one city, 22 campuses. And nobody knows what are the finances apart from an 82-year-old man who signs all the checks, who has access to all the bank accounts, and nobody else knows what is happening in the school. So if you see any large business group, be it Rayan, be it anyone, it is one single person who is running this school. And when we used to go to an institutional investor, his question was, what happens if he's not there tomorrow? Where is the CFO? Where is the institution backing it up? And we had no answer. So we actually partnered with two families who have run D.Y. Patil School, the Fazlani School, the lady who bought IB, and created a team to run those schools. We don't know how to run the schools, neither do we say that we still run the school, but we have created a separate organization with a lot of skin in the game for people who have ran schools for donkey's years. The lady who got IB to India is with us as part of our team. So that is how we countered the risk, and we believe going forward, we would like to do a lot more. And again, answering to Ritesh's question, that too difficult to keep buying assets, too slow, too tough, and there are so many moving parts. At one side is the equity investor, bank, seller, buyer. There's too many things. You're almost like a joker juggling the balls. You don't know which one will fall, and you're back to square one. So we, decided that this whole game won't work. We are for build to suits now. We are basically believe that India, wherever Starbucks goes, there is a school which is required at $100 per month per kid. There is unlimited demand of those schools, and we want to create infrastructure. And now, thanks to these large players like ISP and all, we are building a very interesting school at Hyderabad Airport. Children fly in on Monday morning, fly out on Friday evening. So a lot of evolution is happening in education, school industry, and I think it will no longer be that.
I want to know what are the fees you're charging. What is it they're charging?
So fees in India is nothing as compared to what the competitive market is. We are still at a price point which is much lower than if you compare hotel rates globally in India and you compare education globally in India, it is pathetic. There is a lot of scope to go up from where we are today. So that way I think there is a lot of leverage for the operating bit, and that's why all the global operators are pouring money into India.
So I think one question for you is now what is the depth? I want to understand the depth from you, and what are the numbers? Is it the same 9% sort of cap rate with?
Unfortunately, as I said, as I started, we can't do 9% deals. We're still at about 11, 10 and a half type of deals. And to beat that up and to compete with my friend here, we have started operating schools, and that's where we are looking at a sort of a blended operating plus this yields of 14-15%. Because otherwise,
Create a cartel.
Sort of, but I think we cannot compete with that type of capital what is available today, and unless we go InvIT. That is one of the reasons why we quickly want to go InvIT and reduce our cost of capital.
So I think just for the audience also, purely a legal input, there was a lot of debate earlier whether pure play leasing of school building, or leasing of hospital building is real estate business which is prohibited, or it is infrastructure. Sometime around mid 2015, or I think when they amended the harmonized list, they said education, in brackets they wrote capital stock. Okay, and there was a lot of ambiguity for the longest time in the infrastructure list, that whether this means educational companies that are actually having the building as well, and therefore foreign investment should only go into the education sector, but towards the towards the hospital building or the school, or can you have a standalone entity as well, which is purely leasing the the building infrastructure to the school. And I think there has been significant comfort. We went through, got actually written comfort from SEBI custodian. We got, in fact, for that matter, foreign venture capital investor, which is only applicable to infrastructure, is now has been given to to entities that only own the building. And what can be bigger comfort than the fact that these people have also gone and gotten an InvIT registration for purely being a PropCo. So gone are those days, because a lot of times there was this challenge that are you doing something? So what you would do is that you would guise your lease rentals as service fee, and you were doing a legitimate business guised as service fee. And now I think you can go out and comfortably say this is pure lease rental and this is actually infrastructure. And I think that comfort is developing more and more, and it's given a lot of legitimization. And I don't know if it translates into cheaper costs or not, but
soon it will be. Soon it will be, but answering your question on the courage I went away, I think the way we believe about alternatives is that this is, in alternatives, the success story is to get deep into it and to understand the industry. And you have to dirty your hands in operations. We do a lot of lab space. Again, that is one area not much competition has come in. And one of the reasons is that not many want to do the building operations themselves. They depend on CBREs, JLLs of the world. I think all the alternatives, what at least we see and what we want to get into, we see a fair play of two things. One, understanding the industry, how the industry moves in, what industry wants, and same with education or life sciences. And second is that ability to operate the asset is very, very critical. By the time, like one day, it will happen that where you will have a third-party operators operating the buildings of lab space, or maybe schools. There may be a party like, say today, Orchid. They say, okay, you give us any school, pay us 10%, like a hotel flag, we will run it for you in your name. There will be a day which will come, but today, unfortunately, such companies don't exist. And that is where it's very important for the asset owner to have that ability to be able to run the asset. As I said, that is a very big risk from a family perspective, that if you see all the transactions which have happened in the school industry, the second generation did not want to step in, and the first generation did not have the organization structure to run those schools.
So for you also, there is not much depth in the market, or I want to know about the depth in the market.
Talking about education?
Yeah.
So there is huge depth, there is huge opportunity, both from consolidating existing school operators and from the perspective of building greenfield. I think all tier 2, tier 3 cities have absolutely a dearth of good schools. You go to Nagpur, there is no school which is charging a fee of 2 lakh rupees. And are there parents who are looking for a Cambridge IB education in Nagpur? Yes. And my strategy is always to follow Tata, Starbucks. If some city can afford 2 Starbucks, it can surely afford a school of 2 lakh rupees per annum. And if you see the cities where, and there are Starbucks and no such schools. So that's the way to go about it.
So your problem is that you don't have capital enough to do the deals, or you have, or taking enough capital because of debt. Like, where is this? Why is it not becoming $1 billion platform?
So I think we are growing at a good steady rate. We have collected, if you see, we had a halt in the COVID era, and we have been collecting assets of about $75–80 million every year. We have been selective. We have certain requirements which we put, like not everybody agrees for an escrow. We believe that we want the fees of all the students to be submitted in an escrow, which should come directly. I don't want a rent check to be written by anybody. I want it to be self-written by me during escrow. So I think clearly there are very few operators who are okay to do that. So from that perspective, there is no dearth of capital, but a limit of this. And hence we are now looking at doing more schools which are built to suits, which are going to take time. So I think that's, I would say, it is not the capital, it's not the opportunity. It is about being selective with whom to work with, and to make sure that if now we have institutional capital of wealth, we have to protect that, because one default will create a lot of havoc. And we have seen a case where we went through very challenging times and it was very painful to resolve it. So we have real experience of how one bad operator can really make your life hell.
Can I just move over to the other asset class, which is your life sciences and healthcare, rented factories? Maybe you can explain about it. You've done a platform with Actis. Can you talk about the expectations that they have on the yield side? And one question that I have is, Government of India is offering 8%. You're offering 10%. Do I bet more on you or the Government of India for 2%?
Of course, you should bet on Government of India. Modi is, of course, a better leader than me in terms of what he will be doing as a country. Again, I think with what we are doing with Actis, our strategy is not largely yield driven, it is IRR driven, and we are into a development platform. And we believe that we have a compelling sort of a product here. If you go worldwide and see the REITs, especially the listed REITs in the life sciences space, you will be surprised to see that 50% of the rent does not come from building rents. It comes from tenant improvements. And given the life of tenant improvements and given that they can be recycled, unlike the office tenant improvements, they tend to do very well on the stock market. So I think what we are looking at is a very differential product. We will continue to differentiate ourselves, one, on our ability to operate, which has a significant operating margin. Second, continue to add and provide a value-added product, not a pure play bare shell. And third, of course, not many are doing it, as you use the word courageous or stupid. So I think.
No, I didn't say stupid. I said fearless.
Okay, so we still have sort of a few years of advantage on that. So hopefully we'll be able to consolidate. And we also follow a cluster strategy. So we are going deep in a particular market, let's say Hyderabad or let's say Bangalore, and developing a cluster which allows a lot of competitive barriers.
I'm sorry, I don't know how much you can speak about it, but I think these private equity funds and all, when they come with higher IRR expectations. So
I think Ashish will, over the drinks, explain you his IRR expectations. He's here in the room, so I think that question is more.
Zero expectation on IRR, so he's just lowered it for you. So have fun.
I think if you're doing greenfield and you're doing a differentiated product where you can price it substantially according to what your IRR requirements are, and you are not in a rush to deploy billions of rupees, I think one can meet the expectations of your investors. At least that's what we think as we start this journey.
Sorry, one question from me. So on these kind of buildings, the life sciences one, where you're doing actually the greenfield development, what is the development yield that you're sort of solving for? Like, what is it that makes sense for you to take that risk?
See, again, as I said, we are basically looking for IRRs and funding for IRRs, but typically if you know the private equity IRRs, what a private equity platform, I think 13, 14 YOCs is at least what you need to make sense of the numbers, even if you mix debt and construction timelines and a bit of rental stabilization period. Otherwise, it becomes very difficult.
Okay.
Charles promised me 500 basis points above government bond 10 years.
I still am.
For how many years?
For how many years?
For how many years? Okay, I think.
Just one point. You've talked about depth again and again. So if you look at it, I mean, firstly, there is a reason why these are called alternatives, right, or peripherals.
Correct.
Right. So there is a certain size that this would be within the overall investment market, so to say. If you look at global stats, so typically in a year, real estate investment activity is like $1 trillion, $1.1 trillion or thereabouts. If you look at all of the alternatives put together, right, student housing, data centers, senior housing, all of that, you're talking about 60, 70, 80 billion dollars. So we're talking about 7-8% of the total market. Most of the market is offices, residential, multifamily in the US, and warehousing, right? All these alternatives that we're talking about are literally, single-digit percentage in terms of the overall market. Now, if you look at India, typically we are getting like $4.5 billion every year in terms of foreign capital, right? So a comparable number for India is, $250, $300, $350 million in a year being invested into some of these asset classes. That just gives you the sense of scale, and again, it's not like for like comparison, but I mean, there is a reason why today, like warehousing was maybe 10 years ago in the US or 15 years ago, right? It was an alternative within the real estate space. I think these asset classes also take time to become more mainstream. And,
Yeah. No, I think the one question maybe I think after that, Shobhit, you can ask on logistics and conscious of time. But the one question I keep thinking is sort of, or maybe purely from edu infra side or even there, it's sort of an amalgam of operator and developer, right? And there are enough private equity funds globally that want to invest in growth capital. You talked about 15x EBITDA multiple, 14x, it's not uncommon. So there are people, global funds, which are trying to say that, okay, give me a school deal and I'll deploy a 200 million check size, but control deals. And here you are concerned about counterparty risk, etc. And this is an yield play. And there might be some very good operators. So have you guys thought about, I think, because both of you are probably the largest player in this space, have you thought about like a sort of platform where one entity takes the growth risk, puts in that capital, you pull in some good operator, I don't know, whichever good school operator, healthcare operator, and somebody takes the entire yield play away. Is that something that, because the problem is otherwise how do you get this $200 million control deals?
Good news is that none of the operator wants asset in their balance sheet. So all of them. So when they come in, they are looking at a asset light, but sometimes because they have to meet a minimum check size, they allow the assets to be imbibed in the deal. And once they are stable and they have alternate use of that capital, they will like to exit. Secondly, the global operators coming into India was just a pre-COVID phenomena, and then it was all on halt because of COVID. And now again they are coming with a flurry. But the challenge which they are facing is that they still want to do schools above a certain price point, which are far and few, and they are so profitable and so much of a family branding is with them, it is not easy for the families to let go of them. What is available is not something which is exciting for the school operators, but market is changing very dynamically, because many of these guys are also now looking for doing global IPOs. And most of them have a lot of schools with premium fees, but very few students. Now they want to balance it out by adding numbers of students and not many schools, which India serves very well. Because if you look at the top 10 chains of India, each of them has 1 lakh student plus. There are 2 chains which have now 3 lakh students. So if you acquire one of them, suddenly your size and scale becomes crazy. So there's as I said, tectonic shift is happening in the education sector, especially the K-12, and now this new NEP policy, which allows the school to be broken up into 4 parts. So what we believe is the school will be more neighborhood, more 50,000 square feet, and you will go to specialized school up to class 5th, up to class 8th, then up to class 12. So you will actually not have a single school, and you will be going to 4 different schools in your life. And that will again bring back a lot of what we call as tuition centers or education, a new asset class, which will come into being, which will be a 50,000 square feet asset, but will be closer home. And that will have about 500 students or 300-400 students, and focused.
Another space within the education infrastructure is, of course, student housing.
Yeah,
right?
exactly.
And globally, of course, that's a much more accepted asset class.
It hasn't been
You've
very
already
successful.
done some of that. There are a few others. We've got a company called Zolo in our portfolio, which manages student housing facilities, not own them. So they're managing about 20,000 beds, 28,000 beds right now. And we are increasingly looking at that space as well. And I think over there we find the ability to scale up better than let's say the pure school kind of a formula. So I think it's a mix of both as far as we are concerned.
And what are the yields that come there in student housing?
We're looking at similar stuff, closer to 10.
Yeah, I just want one question on the education itself. You mentioned twice, and you also mentioned that the InvIT license has come. So what's the thinking? Why InvIT so quickly? Why don't you build scale? And why don't we get capital, whether Indian private equity, dollar, rupee denominated, or dollar denominated?
He wants to make fees money
what's the why not do a private round before go to public?
So I think that is the dilemma we have. The advantages and disadvantages, I'll tell you very honestly in the room. Advantage is we get a permanent platform, and we can continue to raise capital and grow. And fortunately, given the InvIT size and scale, we can actually marry both of your solutions very elegantly. We can get one single investor as a sponsor into an InvIT and grow with him, instead of going for a public, and then it becomes easier to do that. Secondly, because of the tax structure, which we will I think cover in the next session, and in terms of IRR, we are losing about 3 to 4% IRR if we hold it in a non-InvIT structure and not move into InvIT structure, because when your current investor gets an exit and a new investor comes in, the delta is almost 4 to 5% of, if you look at next 4 or 5 years of hold. That is number 2. And number 3, I think clearly, given that we are going towards the blended route of asset ownership with a little bit of operations and all that, sometimes we are not able to get an investor who wants to sort of commingle the operations along with the pure play rental. So which InvIT is solving for. So I think these are 3 reasons why we believe InvIT may be a suitable route for us, but happy
Also,
to
I
learn
think
and debate from
To some
you.
extent, redeployment becomes easier.
Yes,
Because
redeploy. We
there's
are
a need
not.
to get upstreamed and come down.
Yes, so all those I think are more linked to.
And just tell me, is there a benefit in leverage? Does it become?
It is.
Yeah,
It is. It is.
So can you just?
It is. I think it becomes. See, today what is happening is we are getting LRDs on our assets, and the cost is very recently the top banks have started lending us. Till earlier we were dependent on NBFCs. For the latest deal we have got Kotak into our balance sheet now. So I think that that also is helpful.
So what's the how many basis point difference does it make?
I think it will be very difficult to say that because the rates itself are changing.
Because
but
you can
I
achieve
can,
full cross
I think about
collateralization.
100 basis point, because you are looking at a portfolio as such. We have got a rating done. The rating is quite good, so you basically get a rated asset vis-a-vis a unrated single LRD.
So can I just say right now leverage is about what percentage? And
About 9, 8.5, 9, 9.5,
So
depending on
900.
what time and where you have taken.